Valu goes public in Egypt, but as a holding spinoff with in-kind shares distribution. What does that even mean? Sanabel backs an Egyptian fintech IPO. Is MENA about to start financially engineering tech exits? Octa and Octane. One is fixing SME cash flow, and the other is killing fuel receipts. Boring? Maybe. Genius? We'll see. VC funds are now giving big loans. What does that mean for MENA's evolving VC industry? Does it enhance returns? Does it attract more LPs? And finally, what happens when you speak an app into existence in Arabic? Humane and Replit are working on that. And what happens to the idea of backing only technical founders with all this? Hi, everyone, and welcome to a new episode of the VC React podcast. Every week, we bring you insights and reactions from top VCs, LPs, and angel investors reacting to the latest news on startups, VCs, and investment rounds. Let's jump right into it with our amazing guests for today. Karima Hakim, Country Director for Egypt and Co-Director Africa at Plug and Play Tech Center. Salah, Founding Partner at Pitlane Ventures. Waleed Ballaa, Managing Partner at Sukna Ventures, and my co-host Jamie Lane from FWDstart. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to their companies' websites. This episode is brought to you by Octa, the AI-powered finance automation platform built for modern businesses. Managing receivables is not one task. It's dozens of repetitive ones. Correcting invoice details, updating PO numbers, following up on payment status. It's operationally critical, but painfully manual.
Octa changes that. It helps you automate your financial operations, starting with accounts receivable, so you can focus on what you're actually good at, growing your business. From contract to cash, Octa's AI agents handle everything: invoice creation, reminders, dispute resolution, payment tracking, reconciliation, even financing. You don't need to learn how to use Octa. Octa learns how you work. It adapts to your SOPs and existing workflows to get the job done. Finance teams at Careem, Lean Technologies, and Algram rely on Octa to reduce admin time, speed up collections, and unlock cash flow.
If you've heard of them before, you know that they used to say 100 companies use Octa. The number is now 500. They are moving fast. And that kind of growth only happens because the problem is real and the solution actually works. Automate the finance work that slows you down. See how at weareocta.com. Our weekly news are brought to you by FWDstart, a twice weekly newsletter that breaks down what's happening in the MENA startup, VC, and tech space. Jamie, we have a lot to cover today. What do you want to start with?
Yeah, let's start in Egypt in that case. So maybe let's start with Valu, which I think noise around this has been somewhat muted, which is nearly in keeping with, I think, how the company goes about its business, which is just really, really well and sort of avoids signal and it just gets on with it and does it excellently. So they're going to be listing on June 22nd on the EGX, but it's not a typical IPO structure as well. It's quite unusual. So Valu's parent company, which is EFG Holding, it's distributing about 20.5% of Valu shares directly to its shareholders, a structured share handout that gives public exposure to the company. For context, if you're unfamiliar with Valu, it's founded back in 2017. It's a subsidiary of EFG, Hermes Holding. It started in kind of point of sale financing, so your buy now, pay later, like splitting payments to checkout, which we're all familiar with. But look, it's far more expansive than that today as well. You've card-based installment lending, salary advance tools, insurance, travel, healthcare, education financing. And interestingly as well, having had a look through it's not quite a prospectus, but they did provide a sort of a shareholder, a sort of investor manifesto of sorts, along with their kind of financial reports for last year and for Q1 of this year. And something that stood out was nearly a third of its volume now flows through its Visa-backed prepaid card as well. On the financials, let's not maybe go too much into it, but I think that the main thing that jumped out is its like non-performing loan ratio of just 0.72% is insane. Like incredibly, incredibly impressive. I think especially when you compare it to regional counterparts, be it your Tabbies or Tamaras, it's quite a bit of daylight between them. So look, I mean, I guess maybe the first question on one level is, what do we think about this decision to distribute shares?
Maybe I can jump in just because I really relate to this topic, not only with my plug and play experience, but with my previous experience in being inside Fawry. So Fawry is maybe the first technology IPO in fintech on the EGX. That is a big statement because as a brand that is very close to the general public, this was their advantage when they entered the stock market. And usually the biggest barrier for tech companies to enter is that not all their brands and they're not customer interfacing. So retail and individual investors are really hard to commit and to really trust the stock. So after that, we saw another tech listing, which is E39, which is not at all customer interfacing. It's really the back end also in fintech. So that gives us another layer of mutuality. And Value brings forward something a little bit new. I've been very close to the Value pre-IPO team, and I've seen the trend of them acquiring and acqui-hiring solutions like Paynas, for example, and getting a big investor like Amazon have acquired 5% of their company. And this just gave us a bit of a, let's say, of a heads up that this company is looking at a potential IPO and really building that brand. So from my perspective, not mainly on why are they actually listing, but the opportunity that we get by them listing, it could be a very big step to create more trust to the fintech companies that are really becoming customer interface. And unlike Fawry, for example, the users of Value can become the shareholders of this company because they are a different kind of, let's say, users that are maybe more savvy, maybe more also technologically enabled and, let's say, more liquid individuals than the typical Fawry B2B from a kiosk perspective. So I feel that this kind of, let's say, position of Fawry going on the EGX and not another stock exchange is a big statement to build trust in more and more stocks that are tech stocks, but also create more of an inclusion for the users like myself to eventually have also appetite to invest directly via platforms like Thunder if we're not really savvy on the retail investment side. So it was a predictable move, and I think it's a great opportunity. Yeah.
How popular is Value in Egypt? I'm trying to draw a comparison between how popular Talabat was in Dubai and the amount of liquidity that was provided in their IPO. And is there something similar in Egypt?
No one knows AGX better than AFG Hermes. They're historically one of the largest, if not the largest, investment bank, I would say, in public assets in maybe in the region even. No one knows the public market and knows the industry more than Waleed. And if he would listen to that, a huge shout out for the great company he built. Having a 25% market share is insane, especially in a country like Egypt. The biggest value that Egypt faces, I guess, is their inability to go outside of Egypt. The biggest problem with Egypt is going to remain forever the unit economics. The Egyptian pound exchange rate against the dollars will always be a hurdle on them versus Tabby, let's say, because Tabby is today one of the top 10 globally in terms of the amount of money or in terms of money lended, right? I think we discussed that in a previous episode. So if we're going to compare how market share wise, I think Value even have bigger market share than any of the other regional players. It just Value have to go to a market where unit economics in dollar value makes more sense. Right now, I think them going on EGX would be great. I'm not sure how much of the daily trading would be there to make sure this company maybe jump into $1 billion valuation or something like that. But they're definitely, it doesn't look like this is their goal of the listing. It's obviously the goal of the listing is basically liquidating a huge chunk of AFG holdings in the company because there is other investors in the company and there is the ESOPs and other things. It looks very, very much like AFG is trying to take maybe half of their equity or slightly more to basically give it back to their investors. And I think that's great. It's good to list while you don't need much money, but still, I'm not also. I usually after Angami and Swivel, I get very, very worried when we do any workarounds to list. I think everyone on this call is aware of what happened with Swivel and Angami. I think both have lost 99% of their market valuation. So I hope that not going to be the case. And I think it's not going to be the case because the Egyptian market simply doesn't allow it. If you lose a certain amount every day, you trigger
They halt.
the halt trading. We're not in NASDAQ. You can lose an insane amount of money each day for, let's say, a week, and then you end the week by losing 80% of your company or something like that.
If I may add, there's also more the component of listing in your home market. And again, that's really why a lot of the non-American and specifically Middle Eastern technology companies did not get that momentum on an international, especially American stock exchange or stock market, is because of people don't know and even relate Middle East with the very deep tech that they have in the US. So listing in the home market, and that's why I mentioned really the proximity of Value to the potential customers that will actually buy a stock on Value is usually someone quite familiar with the Value and believes and understands what is BNPL, and they're not too away from the space.
EFG, as Mo mentioned, EFG Holding is one of the biggest holding companies in Egypt, and they know the stock market very well. And they didn't exit the old school way. They handed out Value shares directly to their shareholders, like a dividend, a total of 20% of the company's shares, and they want to take that public. Do you think this could become like a playbook for holding companies or conglomerates in MENA, especially in Saudi? We have many holding companies, and we have, for example, MENA is trying to take the holding company public, the whole thing public, not to take parts of it public individually.
I think it's too early to tell. There are lots of specifics about this deal that are not clear. This is probably about liquidity, but there could be also a regulatory angle where EFG has to do this due to regulation. It wasn't clear from the filing they made, but still, it's a profitable company. That has to be, emphasized. They're growing rapidly. They're getting into Saudi, like Muhammad is suggesting. And the whole market for buy now, pay later in MENA is peculiar because it actually is probably growing faster than the rest of the world. And there are a few reasons for that, but one of the biggest reasons is most people in the region do not like to use credit cards. The penetration is lower than the global average due to Sharia compliance or other reasons, and also because of the young demographics and the digital native population that we have here in the region. So on the positive side, you could expect huge growth. And Value is still much smaller than Tabi and Tamara, for example, but at least they show how big a business like this can become. Tabi recently made public that they reached $10 billion in GMV annualized. Tamara, they also released their Q1 financials recently, and it's showing around $4 billion in annualized GMV. They have about 30K merchants. Value, they had about 5K in 2022. So the ceiling for growth is still very high. And we've seen these companies operate across borders. So for better or worse, they're not limited to a single economy in MENA, but they do have that option of growing beyond them. On the other side, what remains to be seen is can they actually keep that stellar statistic that Jamie mentioned about their loss ratio as they grow? What will happen in terms of the new competition coming into the market? In Saudi alone, the central bank last week announced 67 licensee for buy now, pay later. So we have about 70 buy now, pay later players in one market. You have to think that eventually there will be some consolidation happening there. So it's a good market. It's growing faster than the global average, but also very competitive. And there's lots of issues around how these players are going to be able to keep the loss ratio. That's the main metric to look into, the number of merchants that are bringing in, because everyone wants free money. But the real performance happens when the money you're giving out is actually returned back.
Waleed, let me stay with you. If we look at Sanabil's direct investments, they've typically backed US or Saudi companies. It's either or, and usually at much larger ticket sizes. This one appears to be the first direct investment in Egypt for Sanabil, and it's notably small, $27 million they raised from Sanabil and a bank in Saudi. Is this a pivot from Sanabil, do you think? Or does this signal that Sanabil is expanding to financially engineer new IPOs, new tech IPOs in other countries?
It's a great observation. I'm not sure, to be honest, but there is a Saudi angle to value. It's not new for Sanabil to invest in neighboring countries with companies that want to get into the Saudi market. They've done it with UAE-based companies before. It is interesting that it is a smaller ticket size, so maybe there's another reason to this that I'm not aware of.
We keep hearing about dual listings in NASDAQ and in the region, maybe, or in London and the region. Is there room for MENA capital markets to collaborate? Like, can we have in the future a dual listing in EGX and Tadawul, or Tadawul and ADX? Is there cross-border listings for tech IPOs within MENA region? Do you think that would happen?
When I look at the investment landscape in Saudi, which is absolutely the most growing and absolutely the one that's driving most of what we're seeing in the region, I only see PIF. So at the end of the day, almost everyone is a PIF subsidiary. Saudi have a clear direction into bringing most of the regional players into Saudi to actually list. And this is why STV, which is another, in a way or another company that is a subsidiary, a fund that is a subsidiary of a PIF owned company, did with Tabi. So are we going to see Value list in Saudi? I think yes. I think AFG would love that. AFG have some of their companies, for example, listed in Jordan and in Egypt, and it's their playbook. AFG is absolutely the guys who I grew up looking at when it's come to public markets. They have been there, I guess, since I was a kid. I cannot even name someone else that was as old as them when it's come to looking at the public market the way they do and across the region. One of their CEOs at some point was bragging that the stock market in Amman was like very much founded by them, or them being there at the founding point. Yeah, this is how much they love the public market. So Sanabil getting in there is amazing. It's an amazing news for them, because that means now most of their hurdles coming to Saudi would be much, much better. They're coming also in Saudi at a great time. I remember them on early days trying to go to other markets, and it was tough. But right now it looks like Sama. It seems to be more open-minded than ever. And I think it have been giving in the recent months a lot of licenses across the financial sector to so many startups, and I love seeing that, to be honest. I think another positive out of that is we will get to see all the public information, or all the Value now will have to disclose everything to the public, and hopefully Tamara will come public this year or later or earlier next year. And you know how much I'm excited about that IPO specifically, because I think IPO is going to be a reality check to that sector.
Karima, do you think Value has a chance in competing in Saudi with Tamara and Tabi? And Waleed mentioned we have 70. Is there a chance for an Egyptian company to expand in Saudi?
I'll be very biased because I know the execution team pretty well, and even the leadership, and beneath, I think they have what it takes. They are very cautious and very governance-driven people. Bordo, just to quickly comment on the dual listing component for an Egyptian company like Value, the best scenario to dual list is to really exit some of their shares in a strong currency, like even the Saudi riyal, or even in the UAE, where the currency is pegged to the dollar. So avoiding very far markets where they're not known and they will never be able to scale, and dual listing potentially in a market where there's like let's say a pegged currency or a very high liquidity that would defend that currency so they can exit. From a competition perspective, it will come down to the technology, the agility of the team, also the value proposition that they will do. Maybe Value also has a different strategy in not just consumer interfacing, but also B2B plays. So they could bring an array of models that would also work, and eventually, as Waleed, I think, mentioned, the consolidation will be quite interesting to see. And how do they land in the market, not only on a potential listing perspective, but actually in potential acquisitions, how Senable will act as a strategic enabler to this. They're well geared. They're geared from governance, they're geared from an experienced team, technology perspective, they're pretty solid on this. And now they have the backing of the country's main financial enabler that is backed by, as Mo said, the money that is going to move everything forward. So they're not coming as strangers and entering without any support.
A few notes on Saudi. Yes, the number of players is large, but relatively large. It's getting up to 70 now. But penetration is only about like 53% according to a recent report by Tamara. The second thing, I won't worry too much about competition from pure play buy now pay later players. There's lots of opportunities for verticalization, for example. But the corporates themselves, the merchants themselves, the large ones, are actually getting into the game. So in Saudi, for example, one of the bigger players is Extra, the electronics store. A lot of their profit is coming from their own buy now pay later and financing solutions. Jarir was just recently complaining that a lot of their profit was eaten up by the buy now pay laters, and they were looking at doing their own solutions. So you'll get to a point where this might be more of an incumbent play, and that's what was so interesting about EFG. The cost of working capital compared to a standalone buy now pay later might be quite different. The other point I'd like to point out is about this narrative of PIF pushing companies to list in Saudi. As someone who's based in Saudi, I'd like to push back on that a little bit, because the level of coordination is not to that degree. VCs are thinking about their returns, what's beneficial for them, their financial LPs. So it's not that centralized coordination that's happening for listing. If it's beneficial, then yes, but it will be done just to have the listing there.
It seems that the line between
Can I say one
VC and
thing?
PE is getting blurred here, because EFG is a private equity firm more than a VC firm, right? And now we're seeing them active in taking tech companies. Mo?
If any founder that I know can be successful in Saudi or anywhere literally in the world, that is Waleed Hassouna. And I'm very, very excited to see what Waleed will do in Saudi. And Waleed, I didn't mean, by the way, by the BIF comment that is centralized. I meant like this is the sentiment and this excitement about listing in Saudi.
Fair.
Yeah. Okay, great. Jamie, take us to early stage investing now. What's happening with Octa?
Yeah, let's do it. Let's talk about good friends of the show, Octa. I'm nearly hesitant on one level to sort of provide context in terms of what they do, because at this stage of the podcast, you will have already heard what they do from the introduction. But look, it's super exciting. So they've raised $20 million credit facility from the Sukna fund for direct financing. So for some context, maybe that wasn't included in the insertion which we've already had, founded back in 2024 by John and Nipur and Andre. John, obviously, previously at Denari, acquired by Careem, essentially automates financial operations stack for SMEs, invoicing, payments, collections, embedded credit as well. I'm a keen user myself, so I'm a big fan of the platform now. So I'm not overly surprised when I saw this announcement, because I've seen that it's been available on the back end for a while. But yeah, the speed at which these guys push things is also incredible. So look, always continually rooting for them, bias aside, and for the fact they obviously sponsor the show as well. But look, I suppose the problem they're solving for here is cash flow delay. So SMEs across the region obviously are stuck 60 to 90 days, which obviously kills working capital and growth. So look, this will help to this end in terms of embedding credit directly within the workflow. So look, on one level, it'd be remiss not to maybe start with yourself, Waleed, given Sukna's involvement here. And look, it's super interesting. I think it's become nearly like a default at this stage that any time a Series A or a Series B company regionally raises around that, there's some venture debt component like built around some sort of like embedded finance or deferred payment functionality, like whether it's buy now, pay later, it's working capital or something else layered onto whatever vertical that their particular startup is operating in. But Octa's obviously quite a bit earlier, and obviously the pre-seed was only announced back in, I think it was October 2024. So look, I suppose the question that I'm keen for your perspective on, I guess, in terms of why now, like why deploy this kind of facility at such an early stage, and what's different in Octa's case? Because I don't know, it seems less an opportunistic upsell, which certain times it seems like a company's at a later stage, and this seems more like it's kind of been in the product DNA from the beginning.
Absolutely. So, and John said it in a different way. A lot of companies don't die because of lack of revenue, but die because of cash flow issues, right? So that's part of the value proposition. How can we help these companies, the customers of Octa, with their cash flow, starting with account receivable, and covering all the cash flow needs for the company. And that includes embedded credit. So how these customers of Octa can actually extend or help their own customers pay on time, and financing is one way of doing this. I'd like to take this as an opportunity to maybe highlight a few points about the timing of this and what does it mean for the ecosystem at large. This is not venture debt. This is more form of private credit direct lending between Sukna's debt fund and Octa. So it's very bespoke, and it's securitized against the receivables. So it's also low risk, and usually it's a three-way agreement between the vendor, the Octa, and Sukna debt. This is not related to the Sukna Ventures Fund. So what we're doing, and that's the second point, is we're evolving Sukna as a firm from being just a VC investor to more of a structured capital firm that has multiple strategies and managing multiple asset classes. And we've received Saudi's CMA license to provide a debt fund that we launched recently. Octa is one of the early beneficiaries of that. And it's going to be operated separately from the VC fund and from any other strategy that we do, but we benefit together from the shared infrastructure, compliance, technology, and all of that. And we believe that the ecosystem has reached a stage where equity or venture debt are not the only tools that can be useful here, but there could be others as well. And that's part of the evolution of us as investors as well, where we are pushing into those different needs of the startups in the region.
Do you target the same LPs for both equity and debt, or do you have different kind of LPs for different strategies?
They're separate. There could be intersection, but that would be by coincidence, but they're totally separate. And, we keep the teams also, there's a Chinese wall between the teams so that no conflict of interest happens between them as well. And we are thinking of rolling, other strategies down the road, but direct lending is an area where we think a lot of the startups, especially the ones that either need some kind of debt switch as part of their core value proposition, as in the case of Octa, or for others that are reaching a stage where they need to scale up their working capital in a way that is customized to their own needs, so that just tapping any kind of free-formed product out there in the market that might not be suitable for them.
Karima, going back to Octa itself and its business model, embedded finance is no longer a buzzword. Platforms like Octa can become operating systems for SMEs in MENA region. Will banks eventually catch up and defend their territory, or do you think startups will win that race?
Thank you for asking this question. And specifically for that, I think banks are going to join forces with the startups and act more like powering up, like what Waleed just said about having Sukna create a financing also on a debt level, not only venture debt, but we want the banks to do the same as Sukna in the debt side of things, to become really the enabling and the growth partners of companies that they can eventually own equity in. A lot of the banks are LPs and VCs. So finding that synergy between them without really having to compete with the portfolio companies of their VCs that they are LPs of. So I think the synergies is great.
Waleed mentioned that companies or startups die mainly from cash flow gaps. How about Octa itself? If it fails, hopefully it will not fail, and we need them because they're sponsors of the show. But what would be the most likely cause for Octa itself to fail? Is it default risk, collection challenges, customer acquisition cost, or integration with others? What do you think?
This is absolutely my favorite episode of the show because I get to comment on my friends literally each topic. So I've known John for almost a decade now. And I genuinely, I'm sure he was going to hear that. I'm so proud of him and what the amazing work he have done in the previous years. And with that, because I'm 100% sure that wasn't easy to pull together. It wasn't easy to go convince people to give such an early stage company such an amount of money for that. I think they solve a problem that especially in the region, I see as one of the main reasons right after co-founders fighting each other for companies to fail. Sadly, most corporates in the region are still too typical and too corporate and don't want to use this platform to criticize them. But the way they pay startups are definitely one of the main reasons why startups go out of business. And I'm very happy that this is happening. After the collapse, the brief collapse or change of management of Silicon Valley Bank, the region became very, very dire when it's come to accessing such a capital. So I'm very happy that local facilities are doing that. Some banks are actually doing that directly and catching up. Some banks are partnering with Waleed and things like Sukna. We saw STV do that with SAB in Saudi also. And I'm very well aware that Al Mashriq in the UAE is very active in that space. I think they are the most active entity in that space. So I think the market is proven at this point. I think globally, the idea of me not having credit line while having orders worth millions of dollars, or in some cases tens of millions of dollars, is nuts, to say the least. I don't know a single startup in the Bay Area, for example, does not have a credit line from Silicon Valley Bank or JP Morgan. If JP Morgan, the largest bank that the world have ever seen, have a full department now that provides credit lines to startups that are even on seed stage, I think the region is in genuine need for that. To answer your question regarding them failing, I'm very, very biased here, and I'm telling you, John is not going to fail. One, two is he have the right backers right now. At this point with this round, and even the previous round, I think most of the VCs and enablers and entities that he need on board are there. There is definitely execution and a few tweaks there, here and there John will have to achieve. But I think the biggest challenge, he's solving likely the biggest challenge that could face a company like his, which is, I'm not sure if he would be allowed to lend from his own money to continue operations, but I'm sure others will be more than happy to do that. And I'm 100% sure that much bigger entities and much bigger funds will be willing to offer him more credit line. And I think we've seen, if I'm not mistaken, Morgan Stanley give $500 million credit line to Tamara. And I think Octa just came at the right time. I think the market is so ready for them. We have all the special insights here. So
Information rights, but
Yeah. I can't say much, but for anyone who's watching, boring businesses could be good businesses, and Octa is proof of that.
Yep. Okay, Jamie, take us from Octa to Octane.
Sure. Yeah, absolutely. We'll go back to Egypt in that case. So Octane, they've raised $5.2 million round led by Sharouk, Algebra SE Holding, founded back in 2022. So essentially streamlines, digital platform streamlines fleet related expenses. So like your fuel and maintenance to petty cash into a single closed loop wallet. So again, what some may say, as Waleed mentioned there, a boring business, ostensibly, at least in the surface level. But as you mentioned, sometimes they can be great businesses. So and to that end, they've very quickly become the largest fleet payment network in Egypt, cover over 2,400 petrol stations, serve 1,600 corporate clients, manage nearly 250,000 vehicles as well, which is no small feat whatsoever.
This is kind of a full stack solution built around the B2B operational flow. And Octane is digitizing a messy offline workflow. Is this a fintech story or logistics optimization story, or does it even matter for VCs?
It's both, and it's also a sustainability story. Like it's a story that also it's fleet management. Fleet management, there's a lot, there's supply chain concerns, there's climate concerns, there is also a sustainability story. And I met Octane in the first time, like maybe years ago, when they were still different model, maybe before their first or second raises. And it was an introduction directly from the Saudi group that was championed by their sustainability person. So they use them as a sustainability success story. The fintech component is a commodity nowadays. خلاص يعني اللي هو optimizing financing and even getting the payment ready on petrol side. It's a digitization story and a commodity. So it's no longer as strong from a story for a corporate to just use them for payments for the payment rails, but it's the value add that they bring to the table. It's efficiencies on the fleet. طبعا they'll save money, they'll save time, they'll save fuel, but in the same time they will power their ESG officer to the world about how they are actually using local solutions to make the supply chain of, let's say, fleet management better, and in the same time have clear-cut environmental, let's say, impact metrics that they can communicate later. And this is also where we need to head from a narrative perspective, maybe even not on a policy level, because the world, again, is going in different facades with the election of Donald Trump, for example. A lot of the ESG and the sustainability programs were put under question on a policy level even. So the trend is there, but we still need to take this into consideration, because in our region we have a sustainability commitment by most of the countries. We hosted COP27 in Egypt, the UAE hosted COP28. Regardless of our relationship with fossil fuels as an Arab community or as an Arab nation, we still have these narratives that we want to promote through digital engagement. So I think Octane builds that side, and I would add the sustainability angle to be next to the direct verticals that are playing on Octane's business model.
Octane's founders launched in 2022. They employ more than 200 people with 1,600 corporate clients. What's your take on how they scaled this fast? What are they doing right operationally? And where do you see they're going next? Is it horizontally across MENA or vertically inside Egypt?
Look, Karima thankfully mentioned the political side of that, so I don't have to be the one who always start a political debate on this podcast. You know, I'm spending most of my time now in the Bay Area. Sadly, what's happening in the United States usually impacts the region on approximately of a year. Do I see a global trend against sustainability and against being green in general? 100%. The only thing that could slow that down is the situation currently in the region is sending oil prices and gas prices up again significantly. Trump is clear on his ambition of $55 max for a barrel of oil. And this is why he have unleashed the American drilling industry. And right now, America is the largest exporter of oil and the largest exporter of gas as we speak. And also the European Union being a huge opportunity to that. The only pushback on Trump right now is around 5 to 6 countries in the European Union who don't believe in his vision or and that's the way forward. And I have also to say some of those countries benefit directly because they own a lot of IP in the solar, wind, storing, and many other areas where green energy works. So, and also some of those countries.
You can't help it, man. You have to go politics. Yeah. You have to talk politics. Yeah.
So,
but how can you connect that to Octane's?
So the question now will be
for and their future.
Look, I don't think Octane in the region and in Egypt will face a problem. Egypt is in heavy debt that comes from lenders, including the European Union, who really care about ESG. So the World Bank is going to continue its mandate of everyone reporting their ESG filings. A lot of money also is coming from the European Union. The most of the VCs on board with them and in the ecosystem in general have a lot of money from those LBs, this kind of LBs, and I think that's good for them. Outside of Egypt, I'm honestly not sure. I don't think Saudi or the UAE or any country in the region right now will feel really committed to its ASG goals. I don't think I've heard anyone talking about ASG in the Middle East in the last 6 months. But the efficiency side and the supply chain side of the company, which is I would believe the company is more about than sustainability, will definitely flourish. If you save corporates any money, that would be great. If they will eventually have some sort of AI that optimize routes or optimize the way we deliver, I can see a massive opportunity there. Like, I think if they can master some sort of an algorithm or some sort of an AI, or even just a co-pilot using AI on the supply chain side in the region, that would absolutely be massive, and they will be able to sell that everywhere, not only in the region but also globally. The sustainability angle is very questionable at this point of history, sadly.
It's narrative, yeah, Mo. Yani it was not, yani obviously their business model is fintech and fleet management, but at the end of the day, what makes the story even متبلورة, yani sorry for that, this for the corporates, so that because we're talking about the biggest, let's say, multinational, someone like they have ESG metrics, some of them are publicly traded, so it complements the narrative. And a lot of the collaborations that happen with startups, and let me tell you this because we run programs, we do this on behalf of corporates, is the communication. So most of my corporate clients that hire us for startup engagements or tech enablement engagements, they're the communications people that are my first POC. And then we talk to the business lines. This is maybe unfortunate because we're not really talking directly with the innovation folks, but in the status of our emerging market ecosystem, for now, it's a communications and business efficiencies play in some way or another for the corporates to step into the game after the government. ما خلاص بقى, the government spent a lot of money on bringing the enablers and getting the ecosystem up. What will motivate corporates to spend money on programs, on deal flows, on all this? They need that sort of bordo communications and narrative component, and it's more just the narrative level, not the actual value add that they will sign and pay money for. Yeah.
Let's separate between ESG as a term with certain connotations and responsibility and being a responsible player and caring about, the environment, caring about governance and so on. Those are, for me, as an investor, are two different things. ESG, probably, as Mo said, is under a lot of pressure. It's became a political term, but that doesn't mean the market doesn't care about the other stuff. And I think Mo agrees with me on that. So the need and demand will always be there. It might be called different names, but it will still be there. And I'd like to go back to your question, because I think it's a great question in terms of which direction can Octane take. Is it going to be a fintech company covering other things, the other needs, or logistics and supply chain company? And here, history can be a good guide. So in the US, for example, there are two companies, Corpay and Wex, that were actually founded back in the 80s. And part of their value proposition was managing the fuel payments and the fuel cards and so on. So it's a very, very old need for corporates. And the way they grew, they actually started covering other payment needs for these corporates beyond just the fuel cards. So that's definitely an option for Octane as they think about their future. I noticed from the report on Wamba that they were experimenting with AI in terms of not just paying for the fuel, but also saving fuel. So route optimization, for example, fraud prevention. There's lots of fraud here, unfortunately, so they can help with that. So it's too early for the company to have to make that kind of decision, but at least there are a couple of scenarios that they can think of.
But Waleed, let me stay with you. For the founders out there thinking about starting new companies, what's the playbook for spotting these hidden but painful problems in their own cities or communities, instead of chasing trends or what's hot and, like, for example, YC demo days? How can founders find these ideas?
By taking a nuanced approach. Nuance is where you find these opportunities. It's not clear. It's not something that people talk publicly a lot about, and you have to be very aware of how corporates actually function, what kind of dysfunctionalities are there, and pick the problems that you think have at least three attributes. These problems have to be urgent, pain level is very high. They have to be large. So there's a large value pool that is impacted by this problem. And also it has to be viable. Is there willingness to pay? Is there a business model that you can actually adopt to make this business viable? Other than that, it's also by experimenting, right? So you enter into a single problem, but then your client, your customer will allow you to expand into serving other needs. And that's why an investment, a lot of times we focus on existing customers. Are you growing the revenue from your existing customers? Are they inviting you to solve with them other related problems that you have within that company? Especially if you become a system of record for that company and you get integrated into their workflows, then you have that opportunity to actually land and expand into the company. And Microsoft, for example, is a well-known public example of that, where they started out with very simple value propositions, but since they became a system of record for their customers, the corporate customers, they were able to cover many other needs as well.
Great. Jamie, what's next for us?
Yeah, the last story, it just came across a tweet on X, a post on X. I'm still getting confused as to the correct terminology, which I should be deploying now in light of rebranding. But in any case, Amjad's been super active on X recently, but I just spotted this as well, that Replit and Humane have joined forces, or they've partnered to make their I was going to say vibe coding tools accessible across Saudi. In terms of maybe details on the collaboration, so essentially it'll be a localized version of Replit. It'll be hosted on Humane Cloud for sovereign data residency, and then Humane's Arabic first LLM is going to be included within Replit as well, and they're going to be bringing sort of educational programs to help be it students, professionals, government teams, etc., to discover the power of vibe coding en masse.
My only idea here is what happens to investing only in technical founders? If anyone can speak an app into existence, what happens to those ideas?
So before recording, we were talking about Sam Altman's accusations of Mark Zuckerberg offering $100 million to poach his AI engineers. And he was saying only the good ones actually are not taking up those offers. So there's definitely a need for more AI software developers, whatever tools and whatever technologies we can offer people to be contributing to the AI revolution is a big plus. So I see this as a very smart move by both sides. Amjad, originally from Jordan, created this company with his wife and I believe his brother as well. And the company has been growing rapidly, organically ever since. Paul Graham from YC, which is an investor in their company, is a big fan of Amjad. I've met Amjad here in Saudi recently, and I can see why he loved Amjad so much. This is a story that is developing, how people will be building software going forward, and how countries like Saudi Arabia can leapfrog the existing players. So this is a very smart move in my opinion. Replit, even for Replit, I believe they have about 30 million users so far. So the Humane deal, the additional users that can join the platform is not going to be a non-significant number. It's going to be a number that Replit will see very visibly.
Maybe I'm not too familiar with the company, just like Waleed is, but for me, this is a pure inclusion play, and for us to gain a bigger pipeline of people that could have leadership skills, commercial skills, soft skills that we don't often see available in a lot of the technical founders who become leaders of their with practice. And it's also for inclusion. And similarly to Saudi, how can a country like Egypt that is massive in terms of population and the emerging ecosystem within Egypt, so I'm talking about Upper Egypt founders, women founders, whoever is a low-code kind of needs a low-code kind of enablement in order to become an entrepreneur. So it makes entrepreneurship a little bit more a little bit more accessible. And this is on a general term without commenting on the company itself, because maybe I'm not too familiar with their model. But really, this was kind of one of the my favorite parts about AI. It's the inclusion side of things. It's how it's making that a segment that could add in terms of how many more startups can we create. So we are also very happy, and we will also need to differentiate our thesis when we come to invest in different kind of companies that are built with a low code thanks to solutions that use AI, versus the technical founders who are building with a different strategy. And we want to also mitigate the knowledge base, because technical founders know a little bit more about the growth and the scale of a technology product, that maybe after founding a technology company, a non-technical founder, even if the technology is there and has been built, will lack of this. So they also need to consider having technical people on their teams, even if it's not a co-founding team, but really the technical people that will scale it. So this is where the disadvantage is not at the building stage, but even at the scale stage. This founder will need substantial learnings to scale a specific product.
Well, what do you think?
Waleed took away from me the Jordanian pride moment by mentioning that Amjad is from Jordan. But actually, I wanna. Most people listening to this will not know Amjad, so I will have to do a couple of minutes about Amjad. Amjad is arguably the most successful Arab alive, maybe next to Mo Salah in Liverpool. And when I say that, there is no.
Wait. Karima.
I'm saying
what did you?
Mo Salah is losing. It's like one of the worst years for his popularity. Just don't use Mo Salah, the football player, or Mo Salah you. This is also like, maybe you meant yourself. I don't know. بس يعني football player ما حدش طايقه. بس بقول لك.
ليه انا بحبه كمان.
أنا بقول لك
Look, we're not gonna get into Mo Salah debate, because that's gonna unleash me left and right on everyone.
Okay, Mo.
There is
Sorry for interrupting.
In this decade, there is two world-class Arabs like who have conquered their industries, and that is Mo Salah. Whether you like him or not, Mo Salah is arguably one of the greatest players in the history of the Premier League. Live with it. Next to that, sorry, Jamie, I know the Manchester United fan in you is heartbroken right now. But let's go to back.
It's just such a pity he plays for such a,
live with it. Live with it, Jamie.
Fill in the gap.
Okay, so Amjad, just for everyone who doesn't know Amjad is a first-generation American. He is not someone who grew up in the United States. Amjad studied actually in Amman, in Princess Sumaya University. As Waleed mentioned, started this company with his family, moved to the United States, got to YC. He's absolutely the leader of his industry. He have every major investor you can think of in the Bay Area is on his cap table. The other day, I was with Vinod Khosla, from the founder of Sun Microsystems and Khosla Ventures, arguably one of the most successful venture capitalists in the world, and the history too, was sitting for maybe 20 minutes just talking about Amjad nonstop and how great Amjad is as a founder. And if you know anything about Vinod never talks positively about absolutely anyone or anything. So Amjad have built a company that is literally the Facebook of its industry. I cannot think of any of his competitors being anywhere next to him. There is a reason why he's a Google. Google has invested in him, and Google is being one of his main partners. Also, Brad on the other side, because Humane is also led by a Jordanian. So the story of Humane and what have been managed to being achieved in the last 2 months, I guess it's even less than that, is exceptional. The deal with AMD, the deal with NVIDIA. I'm so excited to see what's going to happen, the LLM they're going to build. I know we have Falcon as an Arabic LLM. I'm not sure what exactly happened to it. I'm not sure if there is an API to it. I'm not sure how I can use it on a daily basis, but it looks like Humane wants to build a customer-facing solutions, which is something I'm very, very excited about. but also looking at building infrastructure, which is something that would really, really matter. And I think in a previous episode, we discussed how this is key to our sovereignty as a region. Saudi have put a massive investment, and I hats off on moving most of the data center cloud companies into Saudi in the last couple of years. I think we've seen commitments for literally a couple of billions of dollars during President Trump's visit to Saudi a couple of weeks back. So I think it's all plays in that giving the Saudi general public access to such a tool, I think will unleash so much creativity and so much innovation. And I'm super excited to see the outcome of that. Saudi now have one of the highest number of developers per capita and number of women developers per capita. So I think just imagine how much that deal will lower the barrier to enter such a key industry.
Before we wrap up, a big thanks to Octa for sponsoring today's episode.
If you want to get paid faster, access financing, and automate your receivable process, head to weareocta.com. That is weareocta.com, and take control of your accounts receivable today.
Thank you so much, everyone. Thank you so much, Karima, Waleed, and Mo for joining us. And thank you so much, Jamie, for bringing us all those news every week.